Welcome to ForexTV.com's PM Exchange. It's Tuesday, February 19th. I'm Remy Hoki. Today I'm joined by Peter Rosenstriech, Chief Market Analyst at ACM. Good afternoon, Peter.
Thank you for having me.
Great to have you on the show today.
Great.
Well, as we come back from the three-day holiday weekend, we're seeing the U.S. dollar weaker against both the euro and the Australian dollar. And it's been quite a session with a rally over in commodities and crude topping $100 a barrel today. But if you could start out by telling us what's driving euro strength against the U.S. currency in today's session.
Well, in regards to core drivers, currently we believe that the market is still very much focused on interest rates. Not so much of what the Fed is going to do, given the fact that Bernanke has made it very clear his commitment to aggressively easing and doing whatever it takes to make sure that the U.S. economic health is there and supported by interest rates. This theory has sort of been relatively conferred given the fact that the Fed cut roughly 125 basis points in 2 weeks while the dollar stayed relatively stable and even advanced for a period of time. So the focus is on really what other central banks are going to do. In 2007, the global headlines were talking about a global easing cycle, and it read very, very well. But overall, what we're seeing is that monetary policy has become very nation dependent, which creates a level of uncertainty. Overall, against the majors that are going to an easing cycle, we are subscribing to the dollar smiles theory, meaning the dollar will get weaker and then gain some strength in Q2, Q3 before getting weak for the end of the year. While countries on hold or even raising rates in both G10 and emerging markets should perform well against the U.S. dollar in 2008.
Well, Peter, you just mentioned central banks and how most central banks have been cutting rates, but one central bank that has continued to hike is the RBA. And overnight, due to what we saw from the latest RBA meeting, the minutes, we saw Aussie rally against the U.S. dollar above the 92 mark. So if you could give us your take on what you expect to see from the RBA and where you see Aussie headed both in the near term and long term.
Remy, you bring up a good point. We think the Aussie dollar is going to be relatively strong in the near term. The RBA minutes that we saw last night repeated a lot what was said by officials, but the critical fact was that the board was considering a 50 basis point move in February, and that the choice between 25 and 50 basis points was finally balanced, as they stated. We believe that the RBA will hike twice more to 5.5 in the very near term. We see a potential for an April move and even go and say 50 basis points in one fell swoop in that meeting. Given the inflation, looking at the minutes specifically, the RBA is very eager to lower inflation rate expectations. So they're going to act very aggressively. And finally, the RBA's underlying inflation forecast still remains very much above the target band for the next 1 to 2 years. So they need to pull back on this forecast. In our opinion, the financial markets, the instability in the financial markets is really the only factor that's going to hold the RBA back from going for a second rate hike. In terms of the Aussie, like I stated before, it should appreciate further in the near term. But given the fact that the market has fully priced in 2 more rate hikes, a lot of the move is going to be based more on interest rate differentials than the expectation of a rate hike. But overall, we see the Aussie staying above the 92 level in the near term.
Well, Peter, while we're on the higher yielding currencies, let's take a look at cable. In today's session, the sterling was little changed against the U.S. currency, but it did pull back against the euro. But in the longer term, if you could tell us what will be driving a price action for the currency, both from a fundamental and technical perspective.
Well, again, we are still very focused on interest rates. The BOE eased rates last week, but officials really have cautioned against further cuts due to the inflation concerns. The February MPC minutes really underline the message that we saw from the inflation report that the committee is really unlikely to move at a faster pace or a policy, increasing the pace of policy loosening in the near term. In effect, this should push the market interest rate expectations slightly higher, and that will bring the cable with it in the near term. But overall, we think the underlying economic conditions in the UK have somewhat deteriorated, probably more so than the MPC is giving the market credit for, and will need to go a lot faster and further than they're pricing in right now.
Well, Peter, looking ahead to tomorrow's session here in the U.S., we have CPI data as well as housing starts in the morning, and we also have the FOMC minutes from the latest meeting come out tomorrow afternoon at 2 p.m. Eastern. But while we're always focusing on rhetoric from the ECB as well as comments out from the Fed, if you could give us your rate outlook for the ECB and what we need to pay attention to in terms of ECB commentary.
Well, first of all, Remy, I think the FOMC meeting minutes tomorrow are going to be very, very interesting, given the fact that they encapsulate the 75 basis point surprise move. In regards to the ECB, it started moving towards a shift in monetary policy towards a more dovish stance at the last ECB meeting. Trichet's comments really opened the door to easing. However, price stability is still currently a priority over growth risk. You know, and while inflation is the primary concern, we're seeing little evidence as from spillover from headline to core. And most economists, myself included, believe that in mid-2008, inflation will begin to ease, and that will allow the ECB to move towards supporting growth. As the ECB shifts towards easing, the euro will begin to decline against the crosses as well as the dollar. And we expect in the near term, we expect the dollar only to be slightly weaker in the near term, given the fact that a majority of the Fed's easing has already been priced in.
Okay, last but not least, Peter, if we could focus on the Japanese currency. We've seen dollar-yen mostly range-bound, but recently we saw dollar-yen break past above 108. Now, given that interest rates at the BOJ are at 0.5%, if you could give us your outlook going forward for the BOJ and where you see the yen headed.
We're relatively bearish on the Japanese yen. The combination of expected weaker economic data, economic indicators, the change of guard at the BOJ should keep expectations for any move towards normalization relatively subdued. In fact, the market is now pricing in a probable rate cut in 2008, and overall this will keep the Japanese yen weak.
Okay, Peter, thank you very much for your insight and analysis, and thanks for coming on the show.
Thank you for having me.
This has been your Forex News with Peter Rosenstriech from ACM. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended lower on the day. The major indexes started off the session with a strong advance after the three-day holiday weekend. Wall Street reacted to the rally in commodities with NYMEX crude oil soaring above $100 a barrel. This raised concern about inflation and the Fed Reserve rate outlook. Meanwhile, the market awaits U.S. CPI and housing starts data due out Wednesday morning. At the closing bell, the Dow Jones Industrial Average fell 10.99 to close at 12,337.22. The Nasdaq fell 15.60 to close out the session at 2,306.20, while the S&P 500 fell 1.21 or 0.09% to close at 1,348.78. In the fixed income market, U.S. Treasury bonds saw broad-based selling on the day. Treasury yields are higher as stocks had rallied earlier in the session. This reduced demand for safe haven assets. The benchmark 10-year Treasury note was down with its yield at 4.653%. The 2-year note fell with its yield at 2.055%. Meanwhile, the 30-year long bond declined with its yield at 4.675%. In energy, NYMEX crude oil futures soared today, hitting a record high of $100.10 a barrel. Prices gained over a whopping 4% and ended the session above $100 a barrel for the first time ever. The surge in oil prices stemmed from a combination of factors. First of all, refinery explosion in Texas temporarily shut down production. Meanwhile, OPEC may be cutting back on production at its upcoming meeting on March 5th. And also ongoing tensions between Venezuela and the U.S. all added to the surprising rally in crude futures. The benchmark contract gained $4.51 to end at $100.01 a barrel. In petroleum products, March gasoline futures added 10.93 cents, ending at $2.6031 a gallon. March heating oil rose 11.45 cents to end at $2.7614 a gallon. Meanwhile, natural gas futures added 31.7 cents to end at $8.977 per million BTU. Over in the metals complex, precious metals advance with gold rallying on the day. April gold added $23.70 to close at $429.80 an ounce. In other metals, March silver gained 39 cents to close at $17.508. March copper added 20.05 cents, ending at $3.7235 a pound. Meanwhile, platinum continued to rally, hitting another record high. April platinum gained $89.40 to close at $2,153.10 an ounce. This afternoon, we're joined by Bobby Firestone from Aileron Trading. He'll recap today's session in energy and metals and also give us his short-term outlook.
Well, that was a bit of a surprising rally in crude today. Overall, it just looks like one of those days where the stars and the moon align and everyone goes out and buys. Now, we've had the foundation laid for the last week and a half about OPEC, the idea of the possible production cuts because the price has come off from 100. So that laid the nice base. Obviously, we had a refinery blow up today, I think is the least nice way to put it. So we have a refinery explosion that's taking about 70,000 barrels a day offline. But overall, I think we saw a very reactionary move today. We saw very reactionary buying today. And overall, I'm really looking for a pullback in crude. I just don't think there are enough people who want to be long crude at $100 a barrel to keep the price supported at this upper extreme. So really, I'm looking for a pullback, probably down to the mid-90s in the next day or two. Over in metals, metals are looking okay. Both gold and silver do need to have some pretty healthy moves to the upside to keep the rallies going. Gold, I'm looking for until we can get a close above 940. I'd say be prepared for a move lower. And silver, as always, prone for some big corrections. And if we don't get a breakout above the recent trading range tomorrow, I'd look for a move back below 17.
That was Bobby Firestone from Aileron Trading with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.